Good morning, everyone. And as always, I lost my pointer. Oh, okay, thanks. Gracias. Okay. So I hope everyone had a good time yesterday, right? And good night's sleep after a very, very long day. So today, that's not my presentation. We need the 12. Okay. So today we will be looking at the subject from a different point of view. Over the last 2 days, we were talking about reporting and how to do reporting and everything around that. But in order to do the reporting, especially when it comes to portfolio level reporting, you have to have a green portfolio, right? Or in general, a portfolio. So today we'll be talking about, in general, green financing. This is where I focus my work a lot, because there's a lot of financial institutions that are now looking into creating green products and also kind of managing them in a proper way, amongst others, to be able to report on what they are doing, not only in terms of financial amounts, but also in terms of what we were talking over the last 2 days, so greenhouse gas emissions and in general environmental impact. So in general, and this is what I'm showing you today, like pragmatic steps that we use when we are deployed to a bank and we are tasked to create a green product, right? So this is coming from. It's not coming from any standard, it's not coming from any theory, it's coming from pragmatic experience gained in many banks across different countries. So one of the first steps is to have the proper strategy to introduce the green finance. You need to have an idea what you want to do, when you want to do it, who's doing it, right? Then basically part of the strategy needs to be an environmental impact methodology. So you need to define what you consider green. Then a very good task is to review your portfolio in pipeline to see what are the strategic sectors, and then you can move towards designing the green credit line, green product, maybe with use of technical advisory if it's available, and then you're introduce the training. In the meantime, you also do introduce the product, and in the meantime also you do the trainings. I will go into more detail right now of these steps. So strategy in general needs to define what you see as green, and this is part of one of the principles that I repeated over and over the last 2 days, which is transparency, right? So currently it's not enough to say we have a green portfolio. You need to be able also to say what does it mean that it's green, right? So you can write down the definitions. You can use the definitions from local taxonomy, from EU taxonomy. You can look into MDB common principles, for example, which is a very good source, according to my opinion, so that you have the proper definition, right? And of course, we had yesterday bilateral discussions how to start accounting, how to start, and the answer is the same as for the answer how to start green lending. Start with small steps, right? Start maybe with your own reporting, and then move to the scope 3 reporting, right? And the same answer is about the green lending. Start small, focus on low-hanging fruits, so that you don't shock your internal capacities with some sophisticated green products, although this is also good, but to have these projects. But I really think starting from something that is very easy and having a fast success, it also means a lot internally, for internal kind of, let's say, marketing of green, so that people understand that this is doable, and they don't have the argument, oh, but nobody knows how to do that. Because typically the challenge of introducing green lending is lack of knowledge, and people fear that, and they say, oh, we didn't do it, let's not do it, let's focus on other operations. So, but why I'm saying that? While working on the definitions, what is green, you can either choose like a simplified version. So we will focus, for example, on photovoltaics and solar thermal, and within our definition, we mention only that. Or you do the big step and you already kind of analyze the wide scope of green definitions and just apply it, just to have it, right? So that in half a year, in a year, when you want to widen the scope of types of projects you want to finance, you don't need to go back, add the definitions, go to the board, maybe approve it, and so on, because this takes time. So there are two ways about that. I always support the second, because you do the work once and you have it, right? So that's very important. Within the strategy, also, you need to design the process of governing the green lending. Of course, what's the first thing that comes to our mind is credit assessment and all the credit processes, but also very important is monitoring, review, and verification procedures. Also within the strategy, it's good to align yourself to some international standards that we already talked about yesterday and the day before. Mentioned some green taxonomies. In particular, if there is a national green taxonomy, of course, you need to align yourself to that. And as I said, monitoring, reporting, and verification is very important, so that your external stakeholders, but also internal capacities, understand what's the whole process. Of course, within the strategy, we need to define what are the targets, right? So that there is a particular goal. As I told you, TCFD advises that there is a senior manager or board member responsible for sustainability in the institution, and TCFD also kind of recommends that there are targets for this board member, right? So these targets for the board member could be translated into targets in the strategy of green lending, at least part of them, yeah? And of course, within the strategy, there needs to be a very pragmatic operation manual for relationship managers, in particular, so that they understand, what's the whole process in a very kind of easy and pragmatic way. The next step is choosing the methodology. So, what type of climate action activities we recognize. So we have the climate objectives, right? Mitigation, adaptations, and there are also other, which I will mention later on. And then we also define types of the projects: energy efficiency, renewable energy, real estate, and so on. We'll be talking later on in more detail about that. And within these types of projects and climate action activities, we need to define what it means for us that something is eligible under our green criteria. And this is the critical point. You don't want to be too liberal, because you might be accused of greenwashing, and you also have to be very careful when it comes to be too ambitious, because you want to have loans in your portfolio, right? Green loans. So it needs to be balanced, and of course it needs to always be aligned with local regulations, regional regulations, or the standards you mentioned in the strategy part. For transparency reasons, it's also good to mention what do you understand under greenhouse gases, right? But there is basically one good definition that I showed you, right? But for transparency reasons, just put it there. As I told you also, it's important that it's on the paper, not in someone's mind, or not that we think we are aligned with IPCC or whatever. Just put it on the paper so that you have it, and if anyone asks, you can show it. For example, auditor, rating agency, right? So that's another step. Also, you need to define how do you understand boundaries, and these are different boundaries than we were talking yesterday. I mean, not entirely different, but these are boundaries of the project that you will be financing, right? So you need to define how do you understand these boundaries in order to, when you're assessing the eligibility of the project. Also, you need to define what do you understand under baseline. So, of course, when you're assessing a project against your eligibility criteria, you want to prove that the project is green. And, for example, it saves energy. So you need to understand, you need to define what is the baseline situation, so before the investment, so that we can apply the eligibility criteria and say whether the project is eligible. And the baseline definitions also need to be placed in this methodology for everyone that will be using to be aligned with. Also, it's good to mention how the environmental benefit calculations will be done. Of course, you can be very generic, and you can write according to the best practice, for example. And then you have to rely on people, goodwill of people, and actually people using the best practices. Or in some cases, you can already write down some even down to equations that allow these calculations, right? And the more precise you are, the closer it gets you to having the greenhouse gas emissions that you need for your accounting, right? And of course, within the methodology, again, we have to recognize the proper MRV process. This is just for reminding, when you're creating the product, a green product, you need to consider the risk and opportunities within the target, let's say, sector, just to kind of understand whether this is a good path for you, and also as I said yesterday, by analyzing the risks and opportunities, you this is one of the ways to defining the strategic strategic targets for your green lending. I will not repeat it again. Of course, a very important thing is having the environmental and social management policy. This is an outline. I will not go through it, but I have a question. Which of the banks have it in place already? Hands up. No? No one? Okay, one? Really? Okay, so this is one of the top things you have to introduce. Because it's quite important for the sake of proper risk management. Of course, it's why is it important in most of these policies? I mean, the important parts of these policies is actually recognition of some exclusion statements that we don't finance, I don't know, coal mining, we don't finance any very harmful chemical industry, and there also are parts about social For example, that we don't finance forced labor, which actually, in my experience over the last 3-4 years, we had an issue with this. Some of the PV manufacturers were accused of using forced labor and actually child labor, and we have decided to stop to finance these PVs, photovoltaic, because of that, and they were forced to change their business model in general. And I have to say it helped because they did. So this is one of the reasons why you need to have environmental and social management policy in place, because not always financing a photovoltaic panel is actually green and sustainable. It might actually touch other aspects that we don't want to have in our life. And one of the ways to kind of manage different aspects is the ESG, environmental social governance. It's a framework within which you kind of state that you take care of not only environmental issues, but also social issues, and you have the proper governance. And you remember the first day we were mentioning the ESG, and I was also telling over 2 days that critical thing within the sustainability and greenhouse gas emission reporting is data gathering and data analysis. So to this framework over the last few years, they added D, so ESG plus D. D goes for digital, and the digital allows to analyze the data. And very often, actually, digital projects that serve this purpose are also eligible under green facilities. It's good to have it in mind. Okay, because of the time, I'm a little bit jumping from different, I'm touching different aspects that I see very important, because I want to share as much knowledge as possible. So allow me to jump to another aspect connected with the governing. So the practice shows that whenever a bank is introducing green finance, there needs to be a person that is leading that. Of course, there needs to be a board member that supports it, some senior management, but there needs to be an operational person that, first of all, is well trained, went through one of these trainings. Second of all, is really motivated. And third of all, it's the person is empowered to work between different departments. So typically, this person comes from the product development team, because this is one of the first teams that are dealing with the new credit line, right? So by definition, such a person is the most trained, the most motivated, and also time-wise, this person wants to roll out the product, right? And typically, I call it when I work with them, green lending ambassadors, right? So that they feel better about themselves and also are kind of motivated. And they have to work closely with the senior management and different departments, depending on the where we are at in the process of introducing the project. So first of all, this person takes part in the design of the product, and also operationalizing the product. Amongst others, this is the person that goes through the TOT, training of the trainer, so that the person can then disperse the knowledge, especially to the operational department, to the branch managers, to the relationship managers, and typically this person continues during the operation, at least at the first stages of the operation of the green lending, supporting directly actually the relationship managers that go out with the loans to the clients. It's very important that the RMs have someone to call and ask if this makes sense, right? And then with time, this person kind of focuses on other work, and this role is taken by someone from the operational department. This is the most pragmatic way I saw working very well. And I have to tell you also, I have at least 5 examples where these people made a career in the bank from green lending. One guy started as a kind of normal product manager. Now he's the director of international relations with international institutions for green lending, right? And he has a big team. The other guy started as a relationship manager, actually, creating the product. And now he's leading the whole agriculture department that is doing also green projects. Yeah? So, and there are many others. So this is not only opportunity for the organization itself, but also for people. And the way you need to talk with your employees, right? That this is actually a career path for them, so that they are actually motivated, because it needs a lot of motivation to do something that is a little bit outside of the typical comfort zone, right? Another concept where we also kind of try to implement the green lending in a structured way are green lending principles. Looking at the time. Okay. Green lending principles. Who knows green lending principles? Oh, I don't think you had coffee. Only one person? Or maybe today's coffee is not from Colombia. Okay, so let me tell you. Green lending principles is kind of a framework, I would say, how to provide green lending as the name says, right? And it combines of 4 principles: use of proceeds, process for project evaluation and selection, management of proceeds, and reporting. As you can see, it reflects what I talked before about the strategy and methodology. So this is the methodology, right? So use of proceeds in general is about being able to say what the loan, what the financing you provided covered, right? So you need to know use of proceeds of your financing to even say that it's green. That is why cash loans very often are either excluded from green facilities, or by definition are kind of challenging to do green lending, because for cash loans you don't know how people spend the money. Although I met last year a bank which is providing cash loans, but they do gather invoices for the products people buy, and this way they can somehow do green cash loans, right? Then the next step is project evaluation and selection. So this is about how do you, first of all, select the product, so eligibility criteria, how do you evaluate them, right? So the whole methodology of establishing eligibility of a loan, whether it's green or not. Then the next step is management of proceeds, typically how you monitor this financing. In some cases, the loans are obviously paid out in tranches, so also you need to say that you are tracking the tranches, and there's a segregated account for the client, so that you really kind of, again, know the use of proceeds of a particular tranche, right? So that this money are not spent on something else. But I think it's part of the normal practice of the banks, right? And the last but not least is reporting. I will be talking about reporting later on. So, of course, there are many international institutions. You well know about them. Some of them are actually these institutions, right? And how do they support the green lending or sustainable lending? First of all, very often in, let's say, the least developed countries, they do create the proper healthy finance environment. Specifically, very often there is limited availability of funds for small and medium enterprises. So these institutions do policy dialogue, buy out some banks, restructure them, and provide advisory how to do, in general, financing. And then also they support creation of the financial product. Sometimes they target specific sectors, and they provide technical assistance that is covering actually introduction of green projects. We jump to another concept I mentioned yesterday, but I like it, but I need to repeat it. So typically when in my career, when I work with the eligibility criteria, I use as a kind of source of reference the Multilateral Development Bank Common Principles. This time IDCF is mentioned here. That's so, as you can see. Anyways, these, who knows the common principles? Okay, so you need to get to know them. In general, these principles were created on the basis of a heavy experience of this institution, and they target alignment with the mitigation goals, with the adaptation goals. They aim at, of course, meeting the Paris Agreement goals, and the MDBs in general state that they would like to accelerate transition to green economy, and also they will engage in the policy development. These principles also define the eligibility criteria, reporting, and I believe this is a very good source of reference for many institutions. Of course, these principles are very often adapted for the particular MDB needs. So typically when you Google MDB common principles, you will not find a generic document, but you will find MDB common principles under EIB, under EBRD, under ADB, and they differ a bit. Although the main kind of core goal of this document is the same. And within these principles, they define climate action activity types. So energy efficiency, water efficiency, renewable energy, waste reduction, buildings as a separate sector, soil protection, circular economy, natural positive or natural-based solutions, right? And another categorization that is there, which is in this case mitigation, also sector-related climate action categories, which cover energy, mining, manufacturing, agriculture, waste supply and wastewater, solid waste management, transport, buildings, ICT, research, and cross-sector activities. This is a very good source of ideas what you can do under sustainable finance. The document in general, at least the one that I work a lot with, EBRD version, is quite long. But the thing is that it covers wide range of categories, wide range of sectors, so it cannot be short. Under each of these sectors, there are subsectors, subcategories, and there are eligibility criteria and guidance. So this is a source of eligibility criteria. So whenever I deal with green lending, with green lending, and on one of the facilities, I'm the lead engineer, and someone asks me if something is eligible. If I don't know it, I open the document, do Control F, and just find it. So it doesn't matter if the document is 150 pages. I just read the proper part of the table, and then I know, right? So if you Google it, open it, don't be overwhelmed, okay? Of course, it's good to read it once, the whole, just to understand the whole kind of how it's structured. But in the future, you know, on the daily basis operations, you just read a few sentences. Yeah. So, as I said, I presented here a real case process, how to introduce green products. I will be also talking a little bit in more detail on the next session about some particular elements of this process, like portfolio review. My main message is here that kind of need to start with some small steps, and and kind of try to go through this first few steps to introduce the green loans. Start with something small. With yesterday we were talking photovoltaic, solar thermal, maybe in agriculture if your portfolio is more about agriculture, water saving technologies. I will be showing you today, later on in 4 hours, examples of projects so that you understand what I'm talking about. Okay, and then you will understand maybe what you could actually do with your portfolio. Okay, thank you. And now I give the floor to Christine and Jonas.